If you're selling overseas and still charging GST, you could be making a costly mistake, because in many cases, GST on exports is actually zero. Here's the thing, a lot of Australian business owners assume GST works the same for every sale, but when it comes to GST on exports, the rules are completely different. In this video, we're going to break down how GST on exports works in Australia when your export sales are GST-free, and the key mistake that can cause problems with the ATO. And later, I'll walk you through a simple example so you can see exactly how this works in a real small business situation. First up, the big rule. In Australia, most exported goods are GST-free. That means you don't charge GST to the overseas customer, but you can still claim GST credits on the business expenses related to that sale. So you get the benefit of claiming GST credits without adding GST to the sale price. According to the ATO, one of the main requirements is something called the 60-day rule. The goods must generally be exported within 60 days of receiving payment or issuing the invoice. If that happens, the sale can usually be treated as GST-free. But here's where people get caught out. You need evidence the goods really left Australia. Things like export declarations, shipping documents, bills of lading, courier tracking records. Without those records, the ATO may treat the sale as a normal taxable sale and you could end up owing GST, so documentation is critical. Now let's look at a simple example. Imagine you run a small manufacturing business in Brisbane and you sell a $5,000 product to a customer in New Zealand. Because the goods are exported, you don't charge GST, so your invoice is simply $5,000 with no GST added. But if you pay GST on materials, packaging or freight related to that product, you can still claim those GST credits in your BAS. That's one of the advantages of exporting. Now let's quickly talk about services, because this is where it gets confusing. Some services provided to overseas clients can also be GST-free, but only if the recipient of the service is outside Australia when the service is performed. If the work is done for someone physically in Australia, GST may still apply. Here are 3 practical steps you can follow. Step 1. Confirm whether the customer is overseas and whether the goods or services actually leave Australia. Step 2. Keep proper export documentation so you can prove the goods were exported. Step 3. Make sure the sales are reported correctly in your BAS as GST-free sales. And don't forget, it's worth reviewing your invoicing and accounting system. Quick reminder, this video is general advice only because every business situation is different. If you're one of our clients and you want help understanding GST on exports for your business, we can absolutely help with that. Just arrange a meeting with us, or let's talk about it in your next complimentary tax time meeting. If you found this helpful, give the video a like, subscribe for more business tips for Australian business owners, and I'll see you next time.